Hello all.
Hello.
Good evening.
Good evening.
Hello.
Let me turn down our band.
Oh, come on. Just get my groove on.
You've always got your groove on, Jarl. Always.
Hello.
Life's short, man. Got a groove.
Hi, everybody. Welcome.
All right. I can do full screen. That's what I'll do. Okay.
On which screen?
Yeah. Which one? Which one? Yeah, as I was telling Ariel as we're getting started here, 4 minutes before class starts, I think, hey, I should do that. And so here I am trying to put together something extra for you guys today.
Yeah, Robert changes the entire curriculum 2 minutes before class.
Pretty much. I get complaints about that from my co-presenters all the time. I don't know why.
Yeah, no pressure.
Isn't that called being innovative?
No.
Oh, thank you. I appreciate that, Heather. All right. So how is everybody? Had a good week?
Awesome.
Excellent. So let's
really
do it.
Good.
Excellent. Glad to hear that. So if we think back over the past 7 weeks, so everything up until now has been what I would consider essentials, non-negotiables, in fact, for people who are starting business. During the first half, the first 4 weeks, we were just identifying whether or not your idea even stands a chance, right? But you can only know if it stands a chance if you're clear about what it is. What are your goals? What do you want to get out of this thing? What is it you're providing? Being very clear about that, doing that very simple feasibility calculation, the napkin math we did in week 3. And then in week 4, I ask you to go out and validate it. Get objective opinions about what you're doing. Hopefully at the end of that half, you got to a point where you went, yes, this can work. Doesn't mean it's going to, but it can. I at least have confidence in that. And then in week 5, I ask you to take a look at your business as a machine. What are all the pieces that, when put together and working at its best, generates more cash than it uses, right? And ultimately, the more efficient you can make that machine, the more cash you get out of it. And then last week we talked about marketing. How are you going to get the word out? How are you going to generate awareness and ultimately convert that awareness into transactions, into sales? I honestly don't know where in there's something that doesn't apply to every business out there. Whether you're a for-profit or nonprofit, all of those things apply. So I hope that you have found sort of that same value proposition for those first 6 weeks. Today, we're going to be talking about a number of different things. And this is the day where we kind of play catch up, and I provide a lot of information about things that most of you will need, but perhaps not everyone will need, at least not in the same way. So you might be wondering, well, why the heck haven't we talked more about finances and financial projections? Well, we're actually going to do that today. But one of the reasons we don't spend a full session on that is because everybody's business is different, and what is right for you may not be right for somebody else when you think about the financial reporting and how that's going to positively impact you. So I've pared it down to the only what I consider to be the most essential aspects of financials. I'm getting just a general hiss in my ear. Is that just me?
I will make sure everyone's muted.
Yeah. Okay. It's not a big deal. It's just a hiss. Okay. But I see that Jennifer was getting that too.
Oops.
So,
okay. I'll mute the folks that were not muted. All good.
Yeah. No problem. No problem. I didn't know if it was my headset. So today we're going to be looking at a number of things, and they all are tied together. They seem somewhat disparate, but I think they will all make sense in the end. But before we launch, I would like to find out from you what you've been up to. over this last week? What have you been thinking about, either related to last week's discussion of marketing and sales, or this week and thinking about, what is left that you want to talk about? So, there any thoughts that you have that you want to share, what you've been up to over the last week?
Also, Patrick and Olive have a question in the chat. Patrick and Olive, do you want to unmute and share your question? Because I think it's very related to what you're doing.
So I put in the chat if we could review feasibility, because I was going through this clarity framework and I was able to fill in most of the squares with what we had talked about already in this class, but I was really drawing a blank when I came to feasibility quotient. I looked through the materials that I saved, but I'd love a review of that one if we could.
Okay. Yeah, we can absolutely do that. And in fact, that'll tie in. I can tie that into what we're doing with the cash budget today, which we're going to be doing here in just a minute. So that actually, we should be able to do that pretty easily. Slow me down or remind me if we seem to be getting through things and we haven't done that yet. All right. Any other questions or requests or comments?
I'm going to say I was really thankful. Ariel did an event in Cottage Grove this week, and it was really successful. A lot of folks showed up. It went really good, and I got some contacts out of that, so that was fantastic. So you're doing you're doing what you do well, which is networking in the community. So nice job.
Well
Thanks,
done.
Amy. That's awesome. I appreciate it.
Very well done. Thank you.
Yeah, Ariel is awesome. She met with us this week and we had an amazing meeting too. So those one-on-one meetings, and thank you, Ariel, for all your expertise. It was really wonderful.
A lot, guys. Thank you. I love this. Anyone else? No, I'm kidding.
Richard?
Well, I want to start by saying Ariel's great too, but in my business built simple clarity framework, in my feasibility quotient, I just put in gross revenue, cost of goods, gross profit, OpEx, and net profit. So basically, it's just, was that what we were supposed to do? I mean, basically, I thought we were basically kind of filling in at that place.
Yeah.
Each different spoon.
Yeah. So we'll talk about it more, but yeah, those are all of the elements. Ultimately, what the quotient is answering the question, how many units of your offering do you need to sell in order to cover your costs and meet your goals? Right. That's what we're getting to. Just based on your.
Oh, sorry.
Go ahead.
That's on the break-even calculator, right?
Yes, it's this.
Okay,
yes, it is the same sheet. I actually renamed it, and but the sheet is the same one. It's the break-even and goal achievement calculator is what's determining that feasibility quotient. All right.
Great. So I can just plug it in.
Yeah.
Plug in the numbers.
Yep. Just plug in the numbers.
And then that's the feasibility quotient.
Mm-hmm. All you're really all you're trying to do is get to that point where you know what that number is and you're confident you can do that. Nancy.
This is just a bit of a shout out, but I had the great opportunity of meeting Jen at Bookkeeping Compass through one of your Monday nights, and we had a great meeting last Friday, and she's really helping me with bookkeeping services. So shout out to Jen, who understands this stuff and but anyway, great job. So
excellent.
Thank you.
Excellent. Thank you, Nancy, and great job, Jennifer. Okay.
That was a lot of warm and fuzzies. I like that.
Yeah, that's awesome.
Good.
That's awesome. That's what we like to see. All right. Let me pull this chat up. Actually, I guess I need to do this first. I think we're ready for me to share my screen. So looks like I can do that. Are you looking at Lane Startup Bootcamp needs and next steps?
Yes.
Excellent. Excellent. All right, let me make you big again. And quickly pull up the chat. All right, we're good to go. So welcome to week 7, needs and next steps. So this week we are answering the question, by when do you plan to accomplish what? I actually love that question. That should be on t-shirts, should be on all of my shirts. By when do you plan to accomplish what? It is it's really valuable for you to know that and to write it down and to hold yourself accountable. But
that is accountability right there. That's scary. I'm a little scared reading that.
But that's what we're all about. We are all about that. Today, we're going to be looking at the new business checklist. This is all of just the logistical things that we really haven't talked about much. I'm going to go through it quickly. Again, these are things that are going to relate to each of you a little bit differently, and a perfect place to reach out to us if you have questions for one-on-one. We will look at a cash budget, and I'll share with you a sample and give you a document you can use to budget yourself. In fact, you're going to be doing a little bit of that today. Again, don't be scared. And then we'll do action planning. Very, very, very simple action planning. But action planning doesn't have to be complicated. In fact, it shouldn't be. It should be a very simple thing. So let's get started. Unit 7A, new business checklist. How do you legally start your business in Oregon? Now I'm going to be covering a lot of things that you might think, well, we should be spending lots of time on this. But again, because everybody's at a different place in their business, this is a perfect opportunity to have one-on-one advising. I bring up this image because there is a beautiful document. In fact, during our first break, I'll be sure to get you a link to it, that the state of Oregon produces, and they update it every year or two. It's simply called this, the Oregon Start a Business Guide. It's like 80 some pages long, but it walks you through the process of getting a business started up. And a lot of business owners, where do I start? Not knowing that resource is available. I'm glad they don't market it too much, or people wouldn't come to us. That's not true. There's still a reason for advising. But this is a basic checklist I pulled straight out of their document. So you guys are already in really good shape, because at this point, just from this class, you have covered these items already. You know that you've got knowledge and experience to move forward in your business. You've done some amount of research. You may want to be doing more. What you're doing right now is not formally business planning, but I will tell you, I didn't tell you this at the beginning, filling out that clarity framework is a form of simple business plan. And a full-fledged business plan is going to be deeper. We've talked about that, but you are already on your way there. You have sought professional advice by being here, and you are taking advantage of business assistance programs. In fact, you will see the SBDC prominently listed in the guide as one of the assistance programs to reach out to. So you're already doing that work. We will be talking a little bit. I'm just going to cover some of your options with financing, understanding your business type, business structures, and then you've got to have a name. Most of you do have a name at this point. We're going to look at how to register in case you haven't yet registered your business. We'll do a little bit of tax discussion, but very little. We'll primarily talk about your tax IDs. And then licensing for those of you who need licensing. And then the last two things, we'll talk a very little bit about patents, copyrights, trademarks, and trade secrets, which isn't listed in the guide, and then hiring employees. So those are the things we're going to cover here in just a very short amount of time. I'm just going to touch the surface. So before I jump in, any questions about that? No. Okay. So first item I do want to talk about is your business name. There's not too much to say here. You all know you want to create a name that's unique, memorable, relevant. I'm surprised that I have to say relevant, but there are a couple examples of businesses that I've known through the chamber. One of them in particular, and I'm not going to name them because I don't want to malign them at all, but their name sounds like a health supplement, and they are a contractor. And I I cannot hear their name without thinking that I want to buy a nice fruity flavored health supplement of some sort. But that's what they've chosen. That's the name they're going with. I would be, I would have counseled them in a different direction. But ultimately, your name is very personal. It's up to you to decide what it is you want. So if it really doesn't matter. If you want to be, green tea ultimate fighting, go for it. So a little bit about the URL. You are going to want to get a URL, your web address. You're going to want to reserve that, purchase that, one that is hopefully very closely related to your name, if not the name itself. But do note that your URL, owning that, has nothing to do with protecting your ability to use the name. It doesn't have any legal standing. It's just you happen to have gotten that URL. And in fact, by registering a name with the state of Oregon has basically said, okay, there's no other business by that name here, so you can do business, but you could probably register Pepsi Cola Company with the state, because Pepsi Cola is not registered with the state of Oregon. That doesn't give you the right to use it. So if as you are choosing your name, if you think there's any possibility that somebody else has a national trademark on the name, you'd want to check that out before spending the time and spending the money to build out a branding messages with a name that you're just going to get a cease and desist on at some point in the future, right? So just be careful. You don't have to worry too much about it, but do be careful. Actually, so since most of you will have your business names, why don't we just get a list of business names in the chat? So go ahead and plug your business name in the chat while I start yammering about the next thing. Fern Ridge Events, Ski Bums Garage, Pac West Academy, Way of the Donkey, I love that. Oregon Float Homes, Covered, but yeah, great. Excellent. And I like how with Ski Bums Garage and US Speed Warehouse, they just plug in their URL because their name is the URL. That's optimal if you can make that happen. Excellent. Tree Frog Arts. I like that. Wonderful. All right. Well, congratulations to all of you who have names. If you are still wondering about your name, yeah, and want to pass it by somebody, I'd love to talk about that. I'm sure Ariel would too. So let's go on to business structure. Now we teach a whole class on business structure, on choosing the best legal business structure for you and how to make that choice. But I want to make just a few very simple statements about primarily the LLC. LLCs are by far the most registered business type in the state. I mean, by far more than sole proprietors, and way more than anything else. And there is a reason for that. If you do business as a sole proprietor, you are doing business as an individual. It doesn't matter what your business is named. It doesn't matter if you have a separate bank account. That really doesn't matter. If you're doing business as a sole proprietorship, you are doing business as an individual. Doesn't sound too bad until you've got your wares on a bench in a park and somebody trips over the edge of your table and cracks their tooth. Okay, and then they're coming to you to pay for their orthodontia or dental surgery. If that goes south, if something like that happens, there is no distinction between your business assets and your personal assets in terms of liability. So everything you own is potentially at risk. Now, does that actually matter most of the time? No, it might be 1 in 1,000, it might be 1 in 10,000, but wouldn't it be awful if that 10,000th time was you, right? The LLC is a business structure, and it's actually created by the state. Every state has their own different rules about LLCs, but it is a business structure that when you register, you are creating a business entity for purposes of liability. Now, there's always possibility that somebody can, it's called breaking through or piercing the corporate veil. Somebody might be able to break through and said, no, they weren't actually working as a separate business. It was just them personally. But that's much harder to do if you have an LLC built. And it does cost a little more. LLCs cost $100 to register and $100 every year to renew, as opposed to an assumed business name, which is $50 to register and you renew every 2 years. So yeah, an LLC is a little bit more expensive, but that added level of liability protection, I think most people feel it's worth it. It's not going to be for everybody, but it is for most, just to let you know. From a taxation point of view, the federal government does not recognize LLCs. There is no single member LLC tax form. You're going to fill out your taxes in exactly the same way you do as a sole proprietor. You're going to fill out a Schedule C and submit it with your 1040. It's exactly the same, because it only exists in the state. It is a state organization. When it comes down to corporations, most businesses that are just getting started, that are modest in scope, do not need the complexity, do not need, frankly, the headache of a corporation. Corporations cost several $100s, typically several $100s to put together, if not in the thousands if you're really complicated. And there is ongoing paperwork, there's ongoing maintenance that you have to do just to keep it up and running. Most small businesses don't need that hassle, but it certainly provides, it is definitely its own entity and provides that level of protection as well. The S Corp is not a structure in its own, but it's a way that a business gets taxed. And you can have an LLC and ask to be taxed as an S Corp, or you can have a C Corp and ask to be taxed as an S Corp. There's no reason for us to be talking about that here. If you have questions about that, you can talk to, maybe Jennifer can help you. You could certainly talk to a CPA or an accountant to find out whether or not the taxation of your business is going to be meaningful for you. At the point that you're just getting started, it's usually not a big issue. If you're having to worry that you're making too much money and so taxes are being taken out, well, tough. That would be the time to worry about it. But at this point, we just want to get to where you're making money and it becomes an issue. So those are the differences between them. Any questions on those before I move on? I really don't want to belabor these points much more than I already have. I would see we have several people have said yes, LLC is a CYA, absolutely. And good. It sounds like a lot of people have already chosen their form, mostly LLCs. Nancy makes a point that if you want to hire yourself as an employee, which you can do, you do have to basically choose the S Corp structure or become a corporation. As an LLC, owners can't pay themselves. But as an S Corp, you actually have to pay yourself. You have to pay yourself a reasonable wage before you take any distributions out. So, so good point, Nancy. Okay. So Tyler is an LLC, will be hiring himself as an employee. So this is a situation, Tyler, where you want to choose to be treated as an S Corp. If you choose to be treated as an S Corp, you can maintain the LLC, but you can then hire yourself. In fact, you have to hire yourself. Does that make sense?
Yeah, thank you.
Yeah, you bet. And just so you know, you don't have to take workers' comp as an owner, even if you're paying yourself. You can, but you don't have to. It's one of the exemptions that that's available. All right, and Nancy also brings up benefit corporations, which I have not included. We've already talked about those a little bit in class. Reach out to me if you've got any more questions on this, and we can talk about them individually. In order to register your business, it's really simple. Just go to filinginoregon.com. I know that looks like a private sector web address, but the state has bought it and it links right to their Secretary of State business registration page. It's really easy to remember. It's just filinginoregon.com. And you can get everything. One thing you can do there is do a search for business names. In fact, I'm going to break my pattern here for a second. I'm going to go to filinginoregon.com since we're talking about it. Get rid of my floating meeting controls, and it takes you right here to the Secretary of State's page for business registration. Down here, you've got register a new business, which is not the first button. I don't know why. There's renew business, update registration. Over here is a business name search. This is typically where you're going to start. So if I want to find out who's got ukulele in the name of their business name, oh look, there's a dozen businesses. None of them are called fruitcake ukulele though. So I think I'm good there. So you can research your name, see if anybody's using something like it. You can also find information about businesses that you are interested in, because this is all public record. So any information in here is going to be available to the public. So you could do a search for existing businesses here as well. All right. So, and then, like I said, you will register by clicking here, and you can, all the registrations you can do through an online form. But if you want to know what it is you're going to be doing before you do that, go to business registration forms. Let's imagine we're going to register an LLC, and then go down here to the Oregon Business Registration Forms and click on LLC. And then it gives you these forms that you can look at. So the articles of organization, that's what you're needing. So you would click that, and this would allow you to walk through all the questions. We are not going to go through that today. In fact, I wasn't even planning to go to the site today, but there you are. Okay, so while I'm getting myself back here, any additional questions? Nope. Okay. So, yeah, let's talk about very little bit about taxes. Know that your tax, depending on the type of business you are, your tax calendar is not always the same. So corporations, partnerships, some other forms do have March 15th. I actually have a client who got caught by that because they did not know that they were supposed to file, or at least they told me they didn't know they were supposed to file on the 15th, and then ended up with penalties they didn't want. The EIN is probably the only thing we really need to talk about in here. You will want to get an EIN. That's an employer identification number. The only type of business that doesn't need one is a sole proprietorship that is not going to employ anybody. If that's the case, you can actually run your business simply with your social security number. Nobody recommends that. And in fact, some banks, even though I think legally they have to allow you to have a bank account with your social, some banks will give you a hard time. They really want to see that you have a separate EIN. It does cost $50. There is no renewal requirement. But so that's just something to note. And you simply get that by going to the IRS. Tyler?
Yeah, I had a question about that.
Yeah.
In regards to rental properties, is that an exception, or is that better to not use your social security for your rental properties?
So most people, like we ended up sort of accidentally with rental properties because we couldn't sell them when we moved. And we do not have a business set up for that. We our rental properties, they have their own tax form, so you don't use a Schedule C for those. And I do not have an EIN for my rental properties. But if you wanted to run a business that was property management, you wanted to have a bunch of properties and you wanted them to live within an LLC or something like that, I would absolutely get a separate EIN for that. Just depends on the number you've got. If you've just got a house or two, I wouldn't worry about it.
I was gonna say, what is the number that it changes to probably having to get an LLC for that?
Oh, that's up to you. We could with two, but we just don't have any real need to. It's not complex enough for us to be monitoring that much. So, actually, that's not an area that I'm really fluent in. So, maybe you and I could talk, and we could get some other expertise in on that one, because I'm not that familiar with it.
All right, thank you.
Okay. Yeah, you bet.
Robert, in the chat, Nancy was saying that there's tax benefits to being an S Corp instead of an LLC, which is totally true, but I imagine it's based on size. So if you want to speak to that.
Yeah, so thank you. Yep, there is, let me pull up the chat so I can see that too. So where S Corps first came out was associated with C corporations. C corporations have what's referred to as double taxation, which is really weird. But basically, the company gets taxed on its results, on its net income. And then after that income is distributed to the owners, it all gets taxed on them as owners. So the same income is taxed twice in a corporation, standard corporation. And we don't need to get into why that is. But an S Corp, what it does is it essentially eliminates the corporate taxation. All of the net income goes to all the owners, and it's simply taxed once on the owners. So it does have a positive impact, especially when related to a corporation. For LLCs, it's not quite as there is an advantage that the business, essentially the business pays taxes on what you earn as an employee, which typically is a lot of the total net, and then it doesn't pay taxes on the remainder. So there is advantage there. But I would really I would want to talk to an accountant or CPA before making that determination, because it just gets a little complicated there. You've got to hit certain thresholds before it really makes sense for you. But Nancy is not wrong. Okay. All right. Let's carry on here. So EIN, as I just mentioned, is a federal tax form. There is also a BIN, and don't ask me why, I don't know. But the BIN is the state of Oregon's business identification number. And for the most part, a BIN is only used to track employment records. So once you decide you're going to employ somebody as a W-2 employee, you'll need a BIN. But you don't want to get the BIN until you're at that point, because as soon as you've got the BIN, the state of Oregon presumes you have employees, and they're going to be expecting quarterly reports about your employment. And if you don't have any employees, it's nothing but headache. And it actually can be trouble. I was recently working with somebody who was being assessed fines because he wasn't reporting, even though he had no employees. And so you just don't do it. So wait until you're going to have employees before you get the BIN. All right. Okay. So next, licensing. Just note, you know better than we do whether there's licensing associated with your business. If you are unsure or would like to know what types of industries are licensed, there is an extensive library of licensing on the state's website. It's in the manual. If you're having problems finding it, let me know. We can look it up. But chances are you already know. There may be licensing requirements at the state, county, and city level. So, for example, if you're in food, if you're going to be in food manufacturing, chances are you're going to need licenses at probably all 3 levels. If you're going to be a contractor, you need a state license. So just know that there is licensing out there. However, I should say, in case you're unaware, City of Eugene, City of Springfield, they don't have general business licenses. City of Coburg has a very modest licensing fee for all the businesses that are registered within the city. So that varies based on municipality. All right. So among the other requirements in the checklist is IP, or intellectual property. So there are 4 different categories of intellectual property: patent, trademark, copyright, and trade secret. There may be 1 or 2 of you who are looking at patents here. There's probably nobody that really needs copyright, but we'll talk about that a little bit more. And trade secret, frankly, there's nothing you can do about it, but keep it secret. There is no way to register a trade secret, because once you've registered something, it becomes not secret. So trade secrets are kept secret internally. It's like, I don't know if it's real, but the Coca-Cola recipe is supposed to only be known by 6 people. It's that type of thing. That is a trade secret. Copyright protection is automatically granted to an author or an artist once they've created the work. Now, you do have an obligation to let people know that you're the author in order to maintain that protection, but you don't necessarily have to register it. You can register a work of art with the Copyright Office, and I'll give you the URL to that here in a second, but it's not necessary. You do own the rights to your work automatically. Trademark is different. Trademark protects a word, a name, a symbol, any representation of your business can likely be trademarked. And that's the one area that probably many of you will want to think about it. If you've created a logo that you love, you've got a name that you're really excited about that you think might be duplicated elsewhere because it's so cool, you might want to go through the process of getting a trademark. Now that might cost a few $100s. But if you're thinking you're wanting to build a business, especially if it's a business that extends beyond the state borders, definitely it would be worth taking a look at trademark protection. Again, something we can help you with. Patents protect processes or machines. And there are several different types of patents. Again, most of you aren't going to be involved in patents, but you all go to the same place if you're interested, and it's USPTO, the U.S. Patent and Trademark Office.gov, and you can take sort of online classes there to get better informed about it. They've got a pretty darn good site. It's a lot of information. It can seem a little daunting, but they've done a really good job. You can do a search to see who's trademarked the name that you're interested in. You can do all of that right there on the site. And then copyright has its own site. So if you're interested in copywriting or formally registering a copyright, that's where you would go. Okay. All right. Very little bit about insurance. Do we have any insurance experts here? I always like to lean on insurance experts. Heather, a little bit? All right. All right. So tell me when I say something wrong, okay?
Okay, I will try.
Okay. So you should all consider general liability for your business, just simply because you don't know when somebody's going to trip over your table and crack a tooth. You just don't know, right? Other types of insurance are going to be really up to you, very, very scenario specific. If you have employees, you're going to have workers' comp and unemployment insurance, that type of thing. You're going to be reporting this stuff on a regular basis. If you have property, you're going to want property insurance, insurance associated with your business. If you are a construction contractor, and there are some other types of businesses that require surety bonds, which an insurance agent would say is not formally insurance, but you know what? You go to the insurance agent to get them. So I'm going to call it insurance. It's all in the same boat. And then the last one is that if you get a loan with a bank that is of sufficient size that the bank is concerned, they may ask for different types of insurance. The most common is key person insurance. In the case that you fall off the ends of the earth, they get paid back. So they just want to be certain that they get paid back in the case of catastrophe. So those are different types of insurance. I say it's always valuable to have what they used to call the ABCs on your team: the attorney, the banker, the CPA. But I actually think the first one on the list should be your insurance agent, because that's the one you're going to need most up front. So having an insurance agent that you trust can be really valuable. There is a note down here at the bottom that's important. Traditional homeowners insurance may not cover damage caused by a home-based small business. You do not want to burn down your house building ukuleles without insurance to cover it. It would be a bad day when you had to tell the missus, sorry, our home insurance doesn't cover the cost of the house. Okay, bad day. Bad day for Robert.
If you burn down your house building ukuleles, you're doing it wrong.
Oh, frankly, if I'm building ukuleles, I'm probably doing it wrong. So, and the same can go with automobiles. You know, business use of a car is often not covered in your auto coverage. So this is a place to have that type of conversation with your insurance agent.
Robert, this might be controversial, but there's a site called Thimble that you can turn on and off insurance when you need it. So for instance, like if you're doing an event and you just need insurance during the weekend, you can literally just buy for 2-day insurance or whatever. And it can even be for a few hours. So I would just say that's a cool, definitely read the fine print and figure out if that's actually going to protect you. But in some cases, yes, it's a great option.
Yeah, I don't see anything controversial about it as long as it's up to snuff. You know, if it's got reviews and it's paying out when it's supposed to, that's all. Insurance is actually a pretty simple thing. They just figure out what are the odds of us having to pay out on this, and they charge a little bit more than those odds would require. So that's really good to know. All right, another miscellaneous here: record keeping. In terms of keeping your accounting or any type of records, whatever works for you is fine. Whatever works for you is good. In terms of finance, QuickBooks is the 500-pound gorilla in this world, and I love their origin story. They have just become the player. That doesn't mean they're the best. If you are having to do reporting to like federal granting agencies, you might want to check out and make sure that QuickBooks is sufficiently secure and up to snuff, because there are other systems that some agencies prefer rather than QuickBooks, and that might be a surprise, but that's what my CPA friends tell me. So if you have any concerns about something like that, again, talk to a CPA, but whatever works for you, just get a system. Shoe boxes, that's not a system, right? It's just not. And frankly, I would guess that a shoebox would be better than what is commonly just, rummaging around in the pockets in your car and old coats to find receipts, right? We've all been there. That's not a system. So find a system that works for you. Regarding bank accounts, the only thing I really want to say here is just, it's kind of the number one warning when starting a business is keep your business and personal separate. This includes your banking. In fact, it's probably mostly your banking. This is one of those situations where even if you've registered your LLC, or frankly, if you've got a corporation, If you are commingling funds, which means you are utilizing business money for personal and personal money for business, then no court is going to say that you have a separate business. They are going to rule that you are running the business as a personal project. And again, all of your assets will be at risk. So, and plus, it just makes it so much easier for record keeping and just understanding where you're at. If you're commingling funds, it's almost impossible to get a clear picture of where you are as a business. So just keep them separate, and then
Yeah, and
keep them
just
separate.
keep saying it, Robert. A little pro tip on that is like, as soon as you're ready for some type of accounting software like QuickBooks or Wave Money or whatever, you can actually sync that to your separate business account, especially if you're doing something online. So like QuickBooks Online or something like that, you input your bank account, and then all the transactions from your credit card and any other purchases that are coming in or withdrawals or whatever are all getting logged. And then you go in and you categorize them in different places. So it just makes it like streamlined, easy. I wouldn't say it's easy, but it actually can be sort of fun.
Yeah.
So,
Yeah.
yeah.
Excellent. Great point. Great point. All right, let's go ahead and I just want you, in order to sort of cement some of this stuff, as we've been talking, my guess is that there are some of these checklist items that still might be on your to-do list. Maybe you've already done all of this. I know, we've got Joe here who's been in business for ages, but there are probably things that Joe has on her to-do list. So what I'd like you to do is just spend a few minutes. We'll go into breakouts, maybe let's spend 8 minutes here. Stop sharing and just share what's on your to-do. So I'm going to create rooms of 3 or 4. You've got 8 minutes. Just what is left? What are the gaps you're still trying to fill? All right, let's open these rooms and I'll see you back here in 8.
That happens.
All right.
Welcome back.
Welcome back. So got just a couple minutes here before we want to take a break. So let's talk about what's on your list. What are the checklist items you still have to do? I'm actually going to take notes here because I want to know.
My
Jennifer is on my
shoebox
list.
of receipts.
Yeah, totally.
The receipts?
Yes, my shoebox full
Shoebox of receipts,
from,
yeah.
January to now. Yeah, that's been a very daunting thing for me.
Yeah. Yeah.
I'm keeping it simple. Jennifer's on my list. Just keep it real easy.
I love it.
All things money.
Thanks, Joel.
Everybody I talk to, the first thing out of their mouth is, don't do anything until you've got insurance. Okay. So it's like, that's the key. Finding the right kind of insurance for this type of venture that we're trying to do is going to be key. And everybody says you can't do it. You just, it's not anything that involves a bicycle, everybody freaks out about. So.
And I will say, the insurance world is a strange world. It's a little bit like banking. If an insurance company has had poor experience with a particular type of business, you're going to get risk rated. And another company that hasn't had that same experience is going to give you entirely different rates. So, shop around, shop around.
Business Insurance Solutions in Springfield, they're on Olympia. Those folks are just masterful.
Excellent.
Highly recommend them.
Glad to hear that.
They had a meeting on Friday with the Oregon Department of Education Youth Development Division. I was in the final round. I still haven't heard.
Well, you're still in, Nancy.
But no news is good news.
That's
Haven't
right.
been turned down.
That's right.
And
Excellent.
reportedly, they're working on a website with everybody's name. So I could hear tomorrow.
Good luck. Richard.
Yeah, so Robert, I've basically My list is everything we've gone over. I've fumbled along in a lot of this stuff. I've registered, I've done things like that. But when it comes down to the insurance stuff, so is this something I just walk into an insurance agent and say, hey, here's what I'm thinking, and what do you think, and what am I going to need, and stuff like that? Because this is all like new stuff. I'm not creating something that's already been done. I mean, it has been in certain ways and aspects, but it's new.
Yeah. So if you have an agent that you currently work on for anything, if you're at State Farm, Allstate Farmers, wherever, I just start with somebody They might not be able to serve you, but they're going to be able to point you in a good direction, or go to somebody that's been recommended here. But I would start with somebody and then but don't stop with the first. I would just say don't stop with the first agent that gives you a number, because especially if you're doing something unusual, something new, they might be needing to customize a policy for you based on their understanding, and that is even more reason to shop it around, because everybody's interpretation of what you're doing is going to be a little bit different, and that could have a huge impact on the final number for you.
You can
So-
see Heather's clapping and cheering. She's like, yes, exactly. You need to shop around. That's what she was helping all the businesses in Veneta do, is you call a bunch of places and you get quotes and estimates and you see who's nice to work with. You do some shopping for sure.
And I started with my agents at State Farm, who I do home and auto with, and they said, not us, go to Business Insurance Solutions.
Yeah.
So
Good.
you may get that.
Good. Excellent. Other items on your to-do list? Nicole.
So we're about at the point where we're ready to hire starting in January.
Yeah.
So I need to figure out what record keeping software I'm going to use, because I do everything on Excel sheets, kind of old fashioned. I guess that's how I always did it. And I'm like, oh, I guess I should put it into a software so it can create reports and stuff that I don't have to do myself. But also I think I need to find an attorney, like you were saying, an attorney, a banker, CPA. I have a good relationship with a banker at US Bank, but now I just need an attorney and a CPA that I can trust. Jennifer, are you a CPA? Okay. But yeah, so that's pretty much what's left on my to-do list.
I'm not a CPA, but I'm working with Denise Bean over at Bean Counter for tax stuff.
Yeah.
Okay.
Excellent. Yeah. And if you've got a knowledgeable bookkeeper or accountant and CPA, based on the level of complexity you're looking for, the difference between them is largely what they charge per hour. If you've got a good bookkeeper who really knows his or her stuff, you may not need a CPA, right? So that's kind of up to you.
Okay. My
Yeah.
mom was an office manager for, I don't know, like 20 years, and she did all the bookkeeping. And I did a lot of bookkeeping in my past roles, but she's like the expert. So she's like, I'll do your bookkeeping, and I'm doing her website. So it's kind of like a bargain.
Yeah. Yeah. Regarding employment and employment records, there are lots of ways to do it, and it can get really complicated really quickly. If you want to handle all of your own employment, so you're doing everything in-house, that can be quite a lift. But it kind of depends on the situation and what type of support you have in terms of, what is the software package you're using? How much does it do for you? And there are lots of third parties that can help you out, that can do, they can just do your payroll, just that itself, and that the financial piece, or you can have a company that really handles your HR from start to finish, that will bring people on, get them enrolled, make certain that you have an employee handbook, all those types of things. So there's lots of different levels of support you can get. And I would talk to somebody like your mom, like Jennifer, somebody who can give you some guidance on that, because you've got a lot of options there.
Yeah, definitely. I'm trying to keep it all in-house because I'm able to do a lot of that stuff. So as much as I can do, I will, but yeah, there will be a time when I'm going to have to hire someone to help me.
Yeah. Yeah. And that's really common for a founder to do. Yeah. And you want to do as much as you can, as much as reasonable, until you begin to experience opportunity cost. So you don't have the opportunity to do the things that will grow your business because you're spending all the time just working in the business, right? Rather than working on it. So there's no reason not to do it in-house, but eventually your hours will be worth more than you would spend on somebody else to do that. So
absolutely. Thank you.
I also have a recommendation on attorneys, and I used to be one. Actually, I used to be a trademark attorney, but I met a law firm. It's up in Portland, and they have got the craziest name. It's Rational Unicorn, and they are a public benefit corporate. Yeah, I know, it's weird as can be. They are a public benefit corporation, and they really focus on helping businesses get up and going. They work closely with RAIN and with Reinventing Rural. And they did an organizational document for me for my LLC. And since I used to be an attorney, I understand attorneys, and I will say I think they do very good service. So
excellent.
Rational Unicorn.
Yeah.
Wow, thank you.
And while I'm not supposed to give direct referrals, I will say that their name has come up quite a bit over the last year as a really valuable player in the startup world. So they are focused on small business startups. So definitely somebody to look at.
Yeah, Samantha yeah, awesome. Samantha, you have a question in the chat. Do you just want to come off mute and explain, or do you want me to read your whatever you would like? There you go.
Yeah. There's various kinds of insurance, and I guess what I learned is that being a member of an organization, the American Herbalist Guild, was going to be like much more affordable in terms of professional liability insurance. And it's just if I'm online, then I won't have other insurance considerations. But if I actually had clients come to the place I live at, it's a rental, and my lease says I'm not supposed to do business, which I ignore in terms of making things and working there. But then I would have to figure that out. But if I'm online, by being, it's kind of, I don't want to say it's a trade union, but it kind of is. It's a better deal for professional liability.
Yeah. Heather, do you have a comment there?
Yeah, I just wanted to say that definitely check with any organizations that have to do with your business, because some organizations have better buying power with insurance companies. So definitely check with them and just make sure it's also a legitimate company.
Yeah, when I was at the chamber, the Springfield Chamber, during my time there, we bought into a group policy for businesses that wanted to offer health insurance to their employees, and they can get insurance through the chamber at much better rates than they could possibly get on their own, because we can get group rates because we've got a large body that are all participating. So if you have an association or some group that you're a part of, do check. I think that's great advice. All right. Well, let's go ahead and take our mid-class break at 7:07. Let's come back at 7:12 and we'll start talking about cash budgeting, everybody's favorite topic. See you soon.
Everyone's excited, Robert. You said that well. They're stoked.
I've got a question.
Yeah.
It's a tech question for Zoom.
Yep.
For whatever reason this morning, it started this morning. anytime I try to chat, it completely shuts down Zoom. Has anybody experienced that and know how to fix it?
Did you restart it? There's also a new update. You might just need to update it, and you might also just restart your computer. Sometimes it's just weird glitches.
Okay.
So,
Okay.
and I have not experienced that, Jennifer, but I did discover to my surprise that Zoom is not, the platform does not update itself. It doesn't even give you the option to update. You actually have to go in, log in and say, I want to update in order to get updates. So a couple of weeks ago, I found that I was months behind and didn't know that. So
Mine gives me notifications to update.
Really?
I don't know. Yeah.
Mine does not, doesn't give me anything.
Okay, I'll check that. I'll restart my computer and I will check the Zoom notifications.
Yeah.
One last question, I'll leave you alone. Does Oregon have personal property tax? You had property tax up there, but do they have the personal property tax where businesses need to pay the percentage of tax on, like, say, a manufacturing company? I know I had to pay a percentage on my CNC machinery all the way down to my tool and dies. Does Oregon have that same thing in the county?
Yes.
Okay. I wasn't
Yes,
sure if
it
that's
does.
what that had meant. Okay. Thanks.
Yeah, when it said property tax, it's just such a awkward, it's just such an awkward that will not apply, even though you're supposed to register. It's not going to apply to most anybody here for a little while anyway. It's something that I just glazed over today because, yeah.
Yeah, no, that makes sense. I just want to make sure that Oregon did have it. Okay,
Yeah,
cool.
yeah, Oregon does,
All right,
but nobody knows about it. I actually worry that the state, if the counties start looking for money, I worry that they will do an assessment of all of the businesses that have not submitted their forms, whether or not they would actually need to pay anything. And they will assess fines. There it is. Joe's got it. And I don't know if there are fines they can assess, but I could easily see if counties are looking for a cash grab, that property tax, it could easily be a cash grab opportunity.
Actually, I just had a horrific story today of an Airbnb lady outside of, right outside of Cottage Grove, but she's in county. And someone, like some county official, was driving by and saw she had an RV and like wrote one of those letters like, you need an RV permit. And she went in like a good citizen, like, I'll pay my RV thing. And then they came out to inspect and like dinged her on freaking everything. She's like $30,000 later. She hasn't been in business for 3 years. She's written like a 300-page symposium of like application, and they keep on being like 100 more days. And it's just been like years. It's just so sad. And then the county was like, well, actually, you're the only person that came in to pay this. Like, no one pays this. Like, you're the only person that came in, and therefore, like, we're gonna. It's just like, I'm crying so bad. So
yeah, I know in Utah for our manufacturing, we were a small business. I mean, annual revenue somewhere between 2 to 6 million, depending on the oil market at that time. But I was audited twice in 23 years, and yeah, $10,000 fines both times. And it was everything down to, they fined me for not listing our coat hanger and one stapler. I mean, like, literally, they're nuts.
Wow.
Yeah.
Yeah.
It was crazy. Anyway, so that I just want to make sure that was something, as I'm helping people with books, that I pay attention to if anything comes through. So, all right. And Jennifer, to answer your question, Jen and Gatorade.
Joe?
So that I also accidentally ratted myself out on that because my neighbor business was like, it's March 15th. Did you turn in your county property personal thing? And I was like, no, oh my God, I'm gonna go to jail over this. And it's not a big deal if you have property that's valued under $19,000, it says on the top. And then they pretty much send you. So I don't really update it because I just send them that I have a checkout counter and miscellaneous supplies, and I'm at $2,500.
Yeah.
So if you're a bigger business, you might have some problems. And if you have tools, because they ask about that, but it is worth looking into and figuring out that, because I would hate that cash grab happening. So I'm glad I did rat myself out in the long run.
Yeah. So what we're talking about, if you had stepped away, is that there is a a category of taxes it's actually called personal property tax, but it has nothing to do with personal. But as Joe was just describing, it is a tax. It's at the county level, and it's a tax on equipment and basically items owned by the business. That are of lower value. She said less than $19,000. According to the rules, you're supposed to submit a form detailing these items every year, whether or not you meet the threshold for paying anything. And that threshold, I think it's $100,000. It's a pretty significant number. The concern I have is that most people don't even know about it, are not submitting it. And if the county were ever to get in a cash grab mode where they desperately need funds, if I were on their team, I would say, here's a place where we can fine a bunch of people for not submitting their forms, because there are tens of thousands of businesses and we're only getting 3 every year. So that just concerns me a little bit. So something to note. It's probably will never come to anything, but it is a form that's supposed to be filled out every year. All right. Okay, let's dive into cash budgeting. Get back over here. All right, so let me. Okay, you all looking at a bit about financial statements? Excellent. Okay, a bit about financial statements. So we're not going to be talking too much about financial statements, but I at least have to acknowledge what they are, right? First of all, know that financial statements tell stories. Jennifer, I presume, would agree with me. Understanding how to read a financial statement is like learning a different language. When you know how to read a financial statement, you look at the numbers spanning the page and you can see what's been going on in a business. As a banker, that was one of my favorite things, was to sit down with the business owner and describe for them their business over the last year in ways that they hadn't thought of, because they didn't know how to read their statements. But they were almost always surprised at the things that I would find in their business that was clear as day in the financials that they didn't recognize. There's a lot of value ultimately in understanding how to read your financial statements, but I'll say it now and again at the end of this slide, it's not necessary to get your business off the ground. Most businesses start without any understanding of financial statements, and that's perfectly okay. However, as you grow and the complexities of your business increase, being financially literate, which means being able to read your financial statements, is a skill that will serve you exceptionally well. Okay. I had clients, like one client at the bank, who literally threw a book that I had offered, we would give to our clients who we thought might be interested in learning how to read their own financials. He literally threw it back at me and said, I don't have time for that. So it's not for everybody, but I would say it's something to consider. So financial statements tell stories, and there are actually 3, but only 2 that you really need to worry about. 2 financial statements that are the common ones that we hear about. The income statement, also called a P&L or profit and loss, is an expression of your operational revenue and expenses. Okay. You're bringing revenue in because you're selling something, you're providing a service. There are expenses associated with that. There's expenses associated with doing the business. All of that shows up on your P&L, but not everything does. You may be getting non-operating revenue. You might sell a piece of equipment that you're no longer using. That is not operational revenue for you. That's not part of your value proposition. That's something on the side that doesn't show up here. Also, cash from financing and investment. If you decide personally you're gonna write a check to your own business for $5,000 because you've got a project coming up, you want to make sure you have the money for it, that doesn't show up on your P&L. It doesn't show up on the income statement. If you take out a loan or pay back a loan, none of that shows up on your profit and loss. So it's important to understand that the income statement doesn't have all of the cash moving in and out of your business, because if you're relying on your income statement to tell you how you're doing, you can get yourself in trouble, especially if you invoice anything. If you're in your business, you are sending invoices out that need to get paid, the sales that those invoices are based on, they show up as sales on your income statement, but you have no cash until you're paid. And if that cash doesn't come in for 30, 45, 90 days, whatever it is, you may not actually understand, have a good picture of what your capacity is to pay people and make things happen, because your income statement is giving you a false sense of security. So if you're primarily an all cash business, it's not really something to worry about. But if you are invoicing, know that your income statement doesn't tell you the whole picture. Okay. The second common financial statement is the balance sheet. The balance sheet, it's called a balance sheet because it balances your assets, which includes your cash, the equipment you've purchased, anything that any notes that are going to be paid to you, your receivables, all of that. Those are all assets. On the other side, you've got liabilities. And if you take the assets minus the liabilities, which is what you owe, everything that's left over is essentially the net worth of the business. It's called equity. So the equation is assets equals liabilities plus equity. If your liabilities are greater than your assets, you have negative equity. You don't want that. You want to have more assets than you owe, right? So that's a balance sheet. And it's just assets and liabilities leaving equity as the what your business is essentially worth. Both of these are important tools, but as I said before, they are not necessary for a successful launch. There is a third financial statement that you may hear of, or you may not. It's called a statement of cash flows, or a cash flow statement. A statement of cash flows is essentially, the way it's created, it's a secondary report, and it reconciles what's going on in the income statement with what's going on in the balance sheet to show where cash has come in and gone out. But it's really hard to read. It's really hard for most anybody. Even experts struggle to explain a statement of cash flows. So I'm certainly not going to give that to you here. We are going to instead look at a cash budget, where a statement of cash flows is created sort of passively, or as a result of what's going on in other things. A cash budget is a direct financial statement that you are going to be writing down. You're going to be putting the numbers down, and it's really valuable. The cash budget estimates and tracks how all the cash in your business flows over time. That's what it's for. It's useful for predicting when you might need to obtain more cash in the future, in case as you're looking out and you realize that you've got expenses, or you know that you're going to have a dip in sales, and all of a sudden your cash balances are looking really skinny. Note that you can't have negative cash balances, right? Because things have to get paid. So there might be times when I've got to find more money. I've got to find some way to support me through this difficult time. So cash budgeting can help you with that. And it's also useful for assessing how your business is performing compared to your assumptions. It's incredibly valuable. So let's take a quick look at that. I think I've got this up here. So, actually, I'm going to give you access to this document. I am putting in the chat right now. Well, here's right now. Okay, this link should allow you to pull up a Google spreadsheet that is the same document that I'm working on here. And you should be able to make a copy of it. It actually has some numbers in it, numbers that I'm going to look at right now. So you can just erase those once you've made your own copy. So just an overview here, your cash budget, you always start with an initial amount of cash. And then you've got 2 columns in each month. You've got a budget and an actual. You're going to want to start putting budget numbers in. This is what you think is going to happen. You've got lots of opportunities for different types of revenue. If you have different categories of revenue, you don't need to worry about it. If you are invoicing, you can utilize these two boxes here. One is for receipt of invoices that you've previously sent out. And then if you are invoicing people, you can put your invoiced sales here just to keep a record of what those outstanding invoices are. In the revenue, this is actually cash in. It's not it's not money that you've invoiced. That's how this is different from an income statement. So if you're actually getting cash, or people are paying by credit card, or sending you or paying with a check, that is all this revenue you can count in here. Okay, hopefully that makes sense. I know there's a lot of rows here. Don't let it scare you. These are just there. Rows are here to make it easier for you to make some decisions. But if the quantity of rows scares you, just ignore it. Just use one in each of these categories. If you are manufacturing something, we've talked about this before with the feasibility calculations. If you're manufacturing something, there's cost associated with that manufacture. If you're paying money out for materials, for inventory, anything associated with the manufacture of your product, you can put that here in this area. And then all of the other operating expenses go here. And right now, if you just say, yeah, you know, I know generally it's about $400 and you just want to plug $400 down here and other, that's fine. I don't care how you plug in numbers. I just need you to plug in numbers, right? Something. Then down here is payroll. If you are paying people, employee expenses go here, contractor here. You can put owner pay here. Officially, owner pay should actually go farther down here, but wherever you want to put it is fine. How much you expect to pay yourself. And then if you're going to purchase something with cash, with a check, you can budget that, put that here as a negative. If you're going to sell something off, this would be in here as a positive. If you're going to make loan payments, you'd put those in here. If you're going to take money out from a line of credit, you would put that here. Anyway, I don't need to go through all, I guess I already have. I don't need to go through all of this and really beat it to death, but this is a place for you to estimate what you're going to be spending and when. And for Fruitcake Ukes, since I'm going to say that I've got $500 in the bank for Fruitcake Ukes waiting to get this thing going. So we're now in September. So we're going to start in October. So I've got this initial cash, this beginning cash of $500 here. As I go down here, I actually have only planned to sell one uke in the month of October because I don't know if I'm going to sell any, but I'm going to presume that I'm going to sell one, dang it. So one uke for $200. It's going to cost me $100 directly to make that uke because right now I'm spending a lot of money on materials. So I've got to bring that number down, but for now, it cost me $100. I have $600 a month in various operating expenses. I'm spending quite a bit on marketing. I've got insurance, I've got office supplies, I've got my website. So that's my $600. This is $700 because it's including this 100 up here. So I've got $700 in total costs. That's not a good thing because I only brought in $200, but that's where we're at. So at the end of the first month, I've got negative $500 in net cash from operations, which means that my beginning cash for November is $0. Okay, that's not a good thing. And I haven't paid myself a darn thing. So I haven't taken any money out for myself. Thank goodness, because I would be in the hole if I did. But that's my thought. The following month, I'm expecting to sell 10 of those things. So that's $2,000. I'm still 50% cost of goods sold. So that's $1,000 in materials costs. Boy, I've got to get that fixed. And then the rest of these things are all the same month to month. And then in December, I'm planning to sell twice as many, twice as many. And so in the month of November, I actually end up in the positive by $400 and then $1,400 in December. That's good, but I was hoping to pay myself $1,000 a month. I can't do that until I get up to these numbers in December. So all I've done, put an expected revenue in these budget cells here for the months of October, November, and December. I've put how much it's going to cost to make those things. Now, if you're providing a service, this is going to be all going to be empty. You don't have to worry about it. But the rest of my expected expenses down here, and that's really all I have to do. And then this will show me at the end of each month what the increase or decrease is for that month, and then what the ending cash balance is. As you're putting numbers in here, if this ever goes below zero, if this is ever in the negative, that's something you got to figure out. You've got to figure out how to plug that hole. And very often it starts with a significant or starts with more founder investment as your beginning cash to carry you through for a period of time. This is called runway. What is your runway? How long can you keep going before you just run out of cash? And hopefully you can build up your activity. This is a pretty great rate of activity here. If I don't have this, I'm in trouble. If instead of selling 10, I only sell 5, 5 would be $1,000 in November. That would be, what did I just do? Yeah. And this would be minus 500. Then, I'm under, right? That's not going to work. I got to fix that. I've got to figure out, either I come up with another $100 that I can bring into it, or I've got to figure out some way to stop paying expenses or sell more ukes. All right. Fairly straight ahead stuff, but I wanted to go through it with you because what I'd like you to do is spend a few minutes on your own, plugging some numbers in for October, November, and December. And if you had any problems actually getting the spreadsheet, let me know. Hopefully that wasn't a challenge. You can just write these numbers down on a piece of paper and do the math pretty easily yourself if you need to. Okay, any questions before we break for you to do that? Yeah,
Would
Joe.
it be possible, Robert, at the end of the night or in our next amazing aerial update to have that also included? Because I do this on a different computer than I do mine, and it would just be awesome to have that ease, and then everybody would end up having it.
Yep.
I'll put the link in, no problem.
Thank you so much.
Excellent. Okay, so just give a go. Just really all we're looking for are 3 categories of numbers for the 3 remaining months of the year. Revenue, how much it costs to make your thing if you're manufacturing something, and then your operating expenses. And we need some beginning cash. And the beginning cash you actually put in back here in January. Okay, and it carries forward. All right. So give that a go. Let's just take 4 or 5 minutes, and then we can just chat about that. We don't need to go into a breakout. We can just chat about that. So I will shut up now.
So would it be lazy of me to take my numbers from Square and QuickBooks and just put those in and not actually like double check that?
It would not be lazy of you to do that for your. Now, these are numbers, these are real results you've received.
Well, I want to do the profit and loss thing and I need to do it. I've been bad. It's painful for some stupid reason for me. And so is it okay to put rounder numbers instead of like 75 cents or
Oh, yeah.
you should just put like,
So in the budget should reflect what you expect or want to have happen. Right?
okay,
That's
so
what that,
rent,
yeah.
you know, that's coming, it's gonna be X amount.
Yep.
Electricity is gonna be about $100.
Yes, exactly.
And then,
Exactly.
but should I even, so at the end of the month, I get the bill for electricity and it's $96. You really, should I really put $96.57?
So the column right next to budget, the one right just to the right of budget
Actual?
is actual.
So I
So-
should put that in and not be lazy about it.
Yes, you should put your actuals in there and you should leave your budget where it was for that month so that you can compare your assumptions to what actually happened. Because the learning in a budget comes when you compare what you expected to have happen with what really happened. And then you can start making decisions. So that's the great value of a cash budget is not only to project what's going to happen, but then as months go by, you can compare what's happening in real life with what you expected to happen and make adjustments to your future plan based on what's really transpiring in your business.
So it would be a good idea if I went back a couple years and did it.
If you had, yeah, if you had
I have the data,
yeah.
I just didn't really follow through.
Yeah, no, it is
Okay.
definitely worthwhile, especially in your type of business, Joe, where there could be seasonal trends that you have an intuitive sense of, but seeing what those trends really are on paper can be really valuable.
Okay. I'll do it. I guess I'm gonna have to initiate Financial Fridays. Jennifer, I'm coming for you too, girl.
All right, fine.
We
We'll set up a meeting like an hour before we have to open up.
I'll buy breakfast again.
Yes. Those waffles were awesome.
You guys are so sweet. We should actually do that as a meetup, Financial Fridays. Would you guys join a Zoom thing?
That'd be rad.
Heck yeah.
Totally
I would
rad.
do it.
Done. That is
I would
done.
sit here and do paperwork with people in front of me.
Yes. Okay, we're
Yeah.
doing it. Okay, quickly. What time would be a good time for you guys?
I'll bring my shoebox.
What time of day?
It would have to be early morning or after work.
Yeah.
I'm willing to get up early to do it, which says a lot for me.
Is like 8 a.m. good?
I could do 8 a.m. or 8:30.
Okay.
I'm doing
I
kid
think
delivery
Jennifer
to
and I
school.
met.
Put the word
Yeah.
fun in it. Make it Fun Friday Financial.
Yeah, I like that.
But no one wants to do it at like 6 p.m. on a Friday. So it would have to be in the morning.
If there were
Yeah.
drinks involved, maybe.
And then my
Just saying.
numbers would be backwards.
Yeah, I was gonna
So
say
fun.
everybody's
And then
worksheet would be so skewed.
And then it's not fun. It's funny Friday financials.
Okay, I'll
Cheers,
So,
my
I mean,
beers.
if Jarl has to drop his kids off, I mean, I don't have kids yet, but so like maybe even 7 would have to be
Ah,
a
what?
good time. Yeah, I know.
I'm just getting out of bed.
Oh my gosh. I'm a
Okay, I'll
4:30,
send-
5 o'clock guy, so I'm up early.
I'll send out an email, guys. I love this. Okay.
Me too. Me too.
That'd be awesome. Thanks, Ariel.
Yeah.
All right, it has now been 5 minutes for those of you who were doing the assignment. I would love to hear what you came up with. What are the numbers that you've put down? There are only a few of them, so it shouldn't be too difficult to just name them off. And if you were utilizing the spreadsheet, then at the end you should have the very end an ending cash balance for the year after October, November, and December are complete. So what did you find?
well, my head's still above water, so that's a good thing, right?
That's a good thing. That's a very good thing.
I start in the positive every month and I'm slowly adding to that. So I guess that's a good thing also.
Yep.
So
yep.
Just keep plugging away those numbers. I'll be pulling the P&L probably pretty soon. I have the previous owners that I can kind of look at as far as you were talking about seasonal trends.
Yeah.
So definitely Florence being as big of a tourist town as it is, we do have the big waves of people. So we'll see. It's going to be interesting to compare those numbers.
Yeah. Yeah, it will be. Any of you who are in retail, it is likely that you have seasonality and sometimes staggering seasonality. I live in Coburg, and as you probably know, there is an antique fair that until COVID was every year and brought in 20,000 people to our little town. And there is one shop in town that admitted to me that antique fair weekend, which is 2 days, was 90% of her business, annual business. So that's seasonality, right? That's kind of crazy. So it's important to understand that. All right, who else?
My income stuff is really weird.
Mm-hmm.
And so probably I should arrange for a private conversation with you ASAP, just as I'm trying to sort everything out.
Yeah. Your business is going to rely on a combination of sponsors and grants, and earned income is going to be something to try and develop, but it's not yet a part of your model. So that creates real different dynamics.
Yeah, and what I would like, and I already talked to the Ford Family Foundation, and they're really interested in animal therapy and trauma. So I already jumped through the first hoop, but they want to see local financial support.
Yeah.
And they won't fund unless they see that they actually want a solid business.
Mm-hmm.
And so I need to convince the schools that I'm taking my donkeys to, that even though I have grant funding, I need them to pay a little bit, because by doing that, I can increase the funding that I can get to bring services to them.
Yeah. That makes sense.
Yeah.
That makes sense.
And then I do have some places that could pay for young people to come to me. But anyway, yeah, I'm going to set up a.
Let's meet.
Yeah.
Yeah. Perfect. All right. So anybody else? Jennifer?
I've got a question on the spreadsheet because I'm not. Okay, your net cash from operations.
Mm-hmm.
Is that should be revenue minus expenses, correct?
Yes, and
I ran into that too.
There's a problem in your formula.
So are you entering all expenses as a negative?
Thank you. Okay.
Yeah, sorry about that. I actually got this form from the SBA, and they did not. You have to add all of your expenses as a negative for it to calculate correctly.
All right, cool. Thank you.
Yeah. I actually did that myself when I was doing this.
Added as a negative? Like
Yes.
put a minus sign?
Put a minus in front of your expenses. Yep.
Oh.
Mm-hmm. Yep.
That saved me from a panic attack.
That looks much better.
Actually, it's the other way around, because if you put all of your expenses in as positives, your cash flow looks great. All right. Everybody's paying you to use their stuff. That's the best way. All right. Okay. Well, hopefully you've found some value in that. I know that big spreadsheets can be daunting, but just going through and putting some numbers down in your budget is going to be valuable for you. And I would recommend that you actually make copies of this and do this for not only the rest of this year or from whenever you're going to get started, but do this for 12 months or to the end of the next calendar year. It doesn't take that long to put some numbers down as estimates, but that gives you something to work on. And like we've said from the very beginning, until you actually have something written down on paper, it's really easy just to presume that everything's good. But once you put something down on paper, there's some accountability there. There's something that you can assess, that you can measure to, and that's incredibly valuable. So we are getting to the end here. Do want to talk about an action plan, and this is going to be very simple, the simplest action plan on earth, because you've already done most of the work. So let's go ahead and just hit present. That'll be fine. Okay. By when do you plan to accomplish what? That's what we're getting to here, right? So I'm just going to talk about SMART goals because it's good to smart thinking is a good thing, although I'm not a huge fan. So SMART goals, SMART stands for specific, measurable, attainable, relevant, and time bound. And there's about 50,000 different iterations of this, but that's basically what it means. For me, if it's measurable, it's specific enough. So I'm not a big fan of specific. I also wonder who's creating goals that are not attainable, achievable, relevant, or realistic. I don't know why you would do that. So I'm not a big fan of either A or R, leaving me with measurable and time-bound goals. That's all you have to worry about. In fact, I'd go out on the circuit and spread the word on this, except it's just M and T, which has me talking about empty goals, which nobody's going to like. So, but that's all you need to worry about. Is it measurable? And is there a date by which you want to get there?
Robert, that could be a TED Talk, just saying.
All right, so empty goals, that's what you're looking for here. Also, just a little bit of bonus material here. If you are flooded with decision-making priorities that you don't know how to work your way through, the Eisenhower matrix is just a simple way to frame the decisions you're making. It's urgency and importance. If something is important and urgent, do it now, right? If something is not urgent and not important, get rid of that thing, okay? That's, the time you spend on Facebook, non-productive Facebook, right? That is not urgent nor important, so get rid of it. The other two are the tough ones. We spend a lot of times, especially as you as a startup founder, doing things that are urgent but not important. They got to get done, so I'm the one that has to do it. And if you had an unlimited amount of time, that would be fine, but none of us have unlimited time. And the problem that creates is in the upper right. There are important things that are not urgent that you never get to unless you commit to it. And that's why action planning and goal setting is so important, because you can put down on paper that at some point in the future, this is important enough for me to do. And by writing it down, it increases the opportunity for you to actually get it done. So if you can delegate unimportant but urgent things to somebody else so that you can spend more time doing the important work that maybe doesn't have to be done right this minute, but it's got to be done sometime, your business is going to be better moving forward. All right. Okay. So how you do this doesn't matter. Whatever works, works. Whatever works for you, it works. It could be a spreadsheet. A lot of you do like to work on spreadsheets, which is great. You're speaking my language. There are project management applications that you can buy into if you want a system, but I will tell you, don't allow the subscription to a really elegant strategic planning system make you think that you're doing anything. Okay, because we've all done that, where our success has been to get this great piece of software that's going to do so much for me, and then you feel like you've made success, so you don't do anything with it. Okay, you got to do the work. Emails back and forth with an accountability partner. That works. Financial Fridays. That could work. Fun Financial Fridays. Okay, that could work. For our purposes, a line with dots will do. Okay, that's all you need, a line with dots. So here's a line. Okay, it's got dots on it. And those dots are related to different points in time. And for some reason, that one looks like a 7, but it's a 1. Okay, dots on a line. This is for Fruitcake Ukes. In 2 weeks, I want to have a Facebook ad placed. In a month, I want to have my first sale. That's what I put down on my form. By 3 months, I want to get to at least my 30th sale so that in month 4, I can pay myself something, because that's important. And then by 6 months, I actually want to hire somebody to make ukes so I can go off and live on an island. So that is as complicated as it needs to be. A line with some dots, and then you just say what the dots represent. Okay, I was actually going to have us do some of that, but we're coming up on it. So I'm going to count on you to do this between now and next week. And next week, I would love to see some dots on a line.
Can I call mine a Gantt chart?
Hmm?
Can I call mine a Gantt chart?
You can call yours a Gantt chart, but you're going to have to spell it differently, or Gantt might get in trouble, or Gantt might get upset. All right. Does that make sense? So you've already identified the things that you need to do. You know, that we did that in the first third of, actually the first half of today. And there's a lot more on there. You've identified goals back in week 1. Goals associated with this enterprise that you want to have accomplished. So draw yourself a line. If it needs to be a really long line, tape some paper together, right? Whatever it takes. And make yourself a plan. And do note, and I will mention this, so if you have something that is more than 3 months out and requires quite a bit of effort. So these long-term goals, recognize that we as humans have a really hard time prioritizing anything that's farther out than 3 months. That 12-week period is really the sweet spot. Anything beyond that, it's really hard for us to make progress on. So if you have something that's in week 13, 14, 15, anything beyond that, know that you're going to have to break that down into intermediate goals to work on. Otherwise, you're going to go 3 months out, and then you've got this goal that was in the next week, and you haven't even started on it because it just didn't come to mind. So yeah, so if you've got longer term goals, break them down into workable pieces that are at least somewhat less than 3 months out. Okay. All right. So this is where I was going to have you do some breakout, but I spent too long in the first half, so sorry about that. It's really difficult instructions. Draw your own line with dots. Okay. All right. So our job this week is to help you identify by when do you plan to accomplish what, to answer that question. As part of your clarity framework, you could actually, the reason it's long and skinny here, you get that? It's long and skinny here because you could put a line with dots in there. So that's all you need to do. Just draw a line with your dots, or attach an image, whatever you want to do. If you want to actually write it out, that works too. The important thing is that you know what you need to accomplish and you've got some dates associated with them. Fair enough? Okay. So the last thing I want to do, and hopefully I still have this up here, is I don't. Where the heck did I put it? Oh, it's down here. Okay, the last thing I have here is a clarity framework that is filled out, and you probably can't read this, and you don't need to read this, but this is my clarity framework for Fruitcake Ukes. This is what I've put together. Next week is an opportunity for us to celebrate where we've been, what we've been doing, and that celebration is in the form of your startup story. where I am going to ask all of you, and we'll do some of this in breakout and some of it with the full group, but I'm going to ask all of you to share with the group the outcome of this course. So if you've been